Facebook IPO has been so far a disaster. That's the general consensus on it. They put the price at 38, and they wouldn't let the regular folks invest in it in the beginning. And all the connected investors got to put their money in first. Some places you needed at least $500,000 with a bank before you could be part of the initial purchase offer. And then finally they let the regular folks in, and boom, it goes up from 38 to 45 on the first day. And then afterwards it goes, wah, sick their love. Now it's only been a week, everybody calm down, but nonetheless it is down to between $31 and $32 as we're doing this show right now. So it's lost a lot from its peak. It's lost a lot from the initial $38. So a lot of people are angry. And some of those shareholders are now suing. They're suing Facebook, Mark Zuckerberg. They're suing the markets. They're suing the banks that put it out there. They're suing Peter Thiel, who's one of the Facebook owners. They're suing everybody they could get their hands on. In fact, it's not just them. Massachusetts has just served Morgan Stanley with a subpoena. Now, why? Well, here's the interesting part in how it relates to everybody else and how it relates to the overall theme we've been talking about Wall Street. Well, the charges are that three of the Facebook IPO underwriters, Morgan Stanley, JP Morgan Chase, and Goldman Sachs, secretly told their top investors, yeah, we're kind of downgrading it. Apparently, right before the IPO, they got some new revenue numbers that were not positive for Facebook, and they told all their connected people, like, I wouldn't rush into Facebook if I was you. I'd maybe rush out of Facebook. But they didn't tell the public. Now, that's a big no-no if we actually enforced any laws in this country anymore regarding Wall Street. Now, I'm not sure that we do. Mary Shapiro is worried about that. She's the head of the SEC. But when testifying, she said, don't worry. She told the rest of the world, I think there's a lot of reason to have confidence in our markets and the integrity of how they operate. But look at that. It's gotten so bad that the head of the SEC has to reassure the rest of the world, don't worry, we're not running one giant Ponzi scheme here. But it's not a Ponzi scheme, and Facebook isn't, and the entire stock market isn't. But fraud is so systematic that it's become commonplace. It's become the norm. So if you ask one of those people at those banks, hey, you know what, just telling the connected people and your top investors, the richest people that you are connected to, one piece of information, telling the public another piece of information, is that a problem? They'd probably be like, what do you mean? That's normal operating procedure. Now, it's wildly illegal, but nobody ever enforces the laws anymore. There's an amazing stat about 99% of the time that the banks have been fined and said, all right, you caught us, we were cheating. They have admitted no criminal guilt, 99% of the time. Why? Because our government doesn't prosecute these guys anymore. They just don't do it. It's just because why? Our government is run by the banks. So now this Facebook is an interesting small portion of that, but of course, since it's got so much publicity behind it, everybody's up in arms over it as to who had what information and who didn't. And the shareholders who got screwed on that have every right in the world to inquire into it. So let's see how that develops.